This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 6/29/22, show number 405. Well, we're witnessing the sinking of the USS GDP. The ship has hit an iceberg, Nick, and it's going down.
I like that. Yes, GDP reportedly decreased at 1.6 annual rate in the first quarter. I think this number was somewhat in line. So it was pretty expected by the markets. There were no surprises here. For me, Kerry, as you know, I care more. I don't really care so much about these numbers. I really care more about the stock market reaction. And I have to say, yesterday we had quite a sell-off. It was a sell-off of epic proportion. We had a 900-point reversal in the Dow Jones Industrial Average. Market started out very strong, then they rolled over, and then that was coming off of a 1-week rally. Now we're seeing the markets today getting a little bit of a rebound after a kind of a weak start. So it's a pretty wild day out here and a pretty wild week ahead of a big holiday.
Yeah, well, we've started to see these sell-offs take place right around holidays, which we would never see before. It would be keep the ship steady as she goes. Get the C team out there to just have bodies at the desks, and that's it.
That's true. We have seen, you make a great point. We have seen that before now, where the markets don't hold up ahead of the light, with the light volume holidays that are upon us. We've seen some pretty sharp declines. So I have to say that the trend has certainly changed. It's obviously down. And then we get these big counter trend rallies and bounces. Yesterday was quite the sell-off. And it occurred on light volume, which is generally not something we are accustomed to seeing either. Normally when we have a light volume day, the markets go up. But yesterday they just could not catch a bid after the first 5 minutes of the session. And they finished near the lows of the day. Today, though, we're seeing a little change in character. We're seeing big cap tech lead the charge today. That's a little bit of a surprise. Microsoft up 2%, Apple up 2%. Looking over at Meta today, up 2.5%. Oracle's up 1.5%. Meanwhile, technology, for the most part, is lower. So we're seeing a little bit of a surprise there. It's a very strange week. And again, this is why I have to use charts, Kerry, because I can't make heads or tails out of this stuff sometimes, and I've been in this business 30 years.
All right, so gold is not doing much of anything, down a little bit.
Yeah, gold today is, basically flat, just slightly negative. It did start out a little bit stronger. It has rolled over. One thing I would tell everybody, you have to be a little bit careful of the gold miners. They're not acting well right now. The gold mining chart is lagging the metal itself. I never like to see that. I always like to see the gold miners lead. Right now, gold miners are lagging, but the metal right now is still holding in there. So that might live to fight another day. The pattern on gold futures is not broken yet, but it's just not really very strong at the moment.
Okay, the overall trend, the miners have been weak for months, and really the metal has been leading the miners really for months.
Yeah, and even today, if you take a look at the GDX chart today, it's down 42 cents, which is about 1.5% on the downside. But what it's doing is it's making new 52-week lows. So, you could just track the GDX. You could, don't have to track every company out there. This is the big gold miners. This is the ETF that represents them. And this is making new 52-week lows. So, again, that is not a bullish sign for gold in the near term. Now, I do think that's going to lead to a great opportunity. I just want to put that out there. But right now, the miners are weak. The chart is weak. And the metal really can't get going either.
All right. Well, finally, Bitcoin is still trading. Obviously, that 19.7 rate has its support for Bitcoin?
Yeah, so Bitcoin basically on the 21st of, well, that was summer solstice, traded down to 19,600, and we're back into that 20,000 level. We're just floating and going sideways for the most part. This is what we call in the business a bearish consolidation pattern. Now, it can still live to fight here at 20,000 and move up a little bit. It is not broken. That is a big retrace level. Obviously, we talked about it here, where that price level is where the market pivoted in December of 2017. That was the big first Bitcoin rally and then the big sell-off there, big peak. And that's what we're testing now. But once this level cracks, we're going to go down and test 14,000. It may take some time before it does that, but ultimately the trend is down. And again, when you get these big trends like this, they normally don't stop here. But at the moment, on the shorter scale, meaning days to weeks, you could get some upticking here. I wouldn't rule that out, but I do expect Bitcoin ultimately to get down to 14,000.
All right. Well, that's it for today. We're not gonna be doing a show on Friday, holiday weekend. I am off to Connecticut to see the family. But in any event, go over to inthemoneystocks.com. You'll see how Nick has beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz, and your email's always welcome. KL@kerrylutz.com. Promise we will get to them. I have a stack of them saved up over the past month and a half, so we'll get to them next week. And Nick, we will talk to you, I guess, next Tuesday or Wednesday. Have a great holiday.
You too, Kerry. Have a great holiday.